The major problems of most traders whenever they are trading is that they don't know how to apply the effects of fundamental analysis or economical influences on technical analysis. Because now fundamental analysis and technical analysis goes hand in hand. You are simply trading currency against the other. The forex market is all about foreign currencies. Think of the whole countries of the world, the currencies they have. That's probably what represents their economy. That's what we are trading in the forex market. So if you don't know what is actually happening to the economy, which is the sole base of each currency, that means you would not literally understand 70% of what is happening on the forex market. So guys, if this is your first time of coming across this channel, I am Nina Official, and on this channel I share valuable tips and valuable technical analysis lessons that can help anybody to get better in their journey of analyzing properly and taking accurate trades in the forex market. So if you have not yet subscribed to this channel, please endeavor to subscribe, like, share, and also try to turn on your notification bell so in case I publish other content you might want to check them out. And also don't forget to check other content I have on this page, on this channel. You can check them out. 1, 2, 3, or 4, you might find value and something that might literally help you. So straight to today's topic, I want to talk about how to trade economical / fundamental influence on technical analysis. When it comes to forex, one thing is you have to understand what you are doing. It's not an assumption, kind of business. You literally have to understand some theoretical aspects. Understand what is actually controlling the market. Why is the market there? Why are we saying we are trading this against this? What's the reason why you see currencies being traded against the other? Now, the theoretical aspect is very, very important. That makes you to understand really what you want to expect on the chart. And then when you finally go into the chart, you can now start your technical analysis, knowing fully what you are looking for, what you expect to see, and whatever it is that you see, you will be able to interpret it adequately. So now, for the purpose of this lesson, I'm going to be using the USD as example. I'll be using the USD as example. Why? Because USD is a major pair, is one of the major pairs that traders do trade, or is one of, in fact, I can call USD a universal currency. Almost every currencies negotiates with USD. That's how strong they are. So now USD is one of the major currencies on the top there in the forex market. You can think of the USD basket. We have USD CAD, USD CAD, you have Euro USD, you have GBP USD, you have AUD USD, you have NZD USD. So there are a lot of currencies you can trade against the USD. So that's why USD is so much, rampant. And now, when it comes to how to analyze the economic / fundamental influence on USD and then be able to apply it to technical analysis, these are what are involved. First off, each currency has these major economic indicators that tells us if the economy is going weak or it is going stronger. Majorly, the currency of a country is what actually determines or reflects the weakness or the strength of its economy. So if a currency is probably weak, it shows how inferior or how low the economy state is. If the currency is very, very strong, it's typically telling you their economy is, they are trying, they are doing well, people are fine. That's just what it means. Now, when it comes to USD, how do you know when USD is weak? And how do you know when USD is strong? And when you know what happens between these two, how do you apply it on technical analysis? Will you be buying USD pairs or you'll be selling USD pairs? That's the sole purpose of this content. So stick to this video and make sure you watch it to the end. I will make sure I will not be leaving anything behind. Every secret pertaining to this topic, I'm going to be sharing it on this channel. So consider yourself lucky. Now, when it comes to this USD, there are five major economic indicators that helps to show if USD is strong or it is weak. We have numerous of them. Like when you go to your forexfactory.com, you see the news, the way they analyze it, and they show you red folders. That's to tell you that there are major things that can, reflect the state of a country's economy, like a country's currency. But then we have the major ones, and that's why they will tell you we have red folder news. That's to tell you that they start from the major economic indicators. Example is your CPI, you have your NFP, you have your non-farm employment change, yes, and then you have others as well. There are plenty of them, but we have five major ones. The CPI, you can think of the CPI, you can think of the NFP, you can think of the NFEC, you can think of the PPI, and then you think of the FOMC. So these are the five major economic indicators on USD. And whenever you see them, it is typically trying to tell you the state of the USD at the moment. And that's why whenever you see this as a red folder on Forex Factory, it is either you leave the market for them, let them do what they want to do, or you make adjustments and get ready. That's how strong they are, because they are the five major economic indicators that will tell you if USD is strong at the moment or it is weak at the moment. Now, when you now go through all those first five economic indicators and you analyze them, and you see that the percentage is going high, it simply means the USD is strong. When it is going high, it is showing that the economic is very strong. And when the economic is strong, the currency is simply improving. It is going high. And on the structure, on the chart, you interpret it as bullish. Now, if the economic indicators are showcasing, reduction or a reduced percentage, it simply means the currency is weak. There is no improvement in the economy. Maybe people are complaining there is no job. People are being sent home. The employment is changing. People are complaining. No pension, no payment. Like there is so much, or there is war, there is crisis. All these things that makes the citizens uncomfortable are part of things that affect the state of the economy. Because this is money we are talking about. When you talk about money, you talk about people. It is the people that have the money in their hands. And when things are not going fine, it is also affecting the money in their hand. Think of someone that is unemployed. There is no money in his hand. So the person is weak. To him, the currency is weak because he cannot access it. The person who frequently gets paid of his salary at the appropriate time is happy. He goes to the market, he buys. This helps in spending that money in his hand. And the process of that spending is being interpreted on the economic indicator as strength of the currency. So this is how the workflow is. And then when the economy is increasing or is improving, the percentage will be going up. And when the percentage is going up, it reflects as a bullish, interpretation on the chart. That's exactly how it is. So once you see all these economic indicators showing a reduced percentage on the fundamental analysis, or when you check the news or you check the major US news sites, you see that the CPI, maybe from the last 3 estimations, it has been showing weak, that reduced percentage like 30%, or it's showing, sometimes they analyze it for you in red, so you don't need to go to US and be analyzing people yourself and see if their economy is bad. No, just go to the US site. You can go to New York Times, you can go to your forexfactory.com, my FX Forex book. All this, they are there to help you to see the state of each currencies. And whenever you go there and you see the CPI, the NFP, the FOMC, the PPI, the non-farm employment change, and they are showing a reduction in percentage, or they are showing in color red, it simply means the strength of USD is weak. And when it is weak, when you come to your chart on technical analysis, you want to apply the effect of what you have found on the fundamentals. When you come to your chart, it's simply interpreted as bearish, which means all USD base pairs is gonna sell. That's what it literally means. All USD base pairs are going to sell because the fundamental says the USD is weak. Weakness simply means the currency is going down. And when you come to your chart, something going down simply means what? Bearish in structure. It's as simple as that. But when you check out and you see that everything you are getting approximately or at average estimation, it is pointing, improvement, and the chart says green, the percentage is, it keeps going up, plus, there is no minus. When you come to your chart, it is simply telling you bullish structure, and that means the USD base pairs are going to buy. And when you are buying a USD base pair, you will be selling the USD quotes pairs. That is, for example, let me clean all this. So, for example, now, when the economic indicates that the strength of USD is very, very strong, which means bullish when you come on chart, you are simply looking to buy USD based pairs. So you'll be looking to buy pairs like USD CAD. You'll be looking to buy USD JPY. You'll be looking to buy USD what's it again? USD CAD, USD JPY. What else again? You can think of it, but this is what I mean when I say USD based pairs. So you are literally trading another pair against USD, but then this is how it is. USD based pairs. The first pair you see is the USD to trade against the other. So that's why we say USD based pair. So the first currency you see is the pair, is the base, while the second is the quotes. So you look at to buy USD based pairs, and then you sell USD quote pairs. How do I mean? All your Euro USD, GBP USD, AUD USD, and then the likes, you sell them. So that's how to analyze. That's how to add fundamentals / economic influence to your technical analysis, and this will help you to be stronger, so that whenever you go to the market, you are not always stranded. When you analyze and you hit SL or market keeps going out of your way, you will not be wondering what is happening. So this is literally how this helps you. Alternatively, you should be conversant with the DSY basket, the basket type of pairs. The basket type of instruments. They are what shows you the estimations of a particular currency. For example, DSY shows you the state of the USD. Shows you the state of the USD at summary. So whenever you go to check DSY on your chart, and whatever structure you find, it's simply trying to summarize the state of the USD currency for you. And that's why you can always use it to determine the structure of other USD based pairs. So that's how they work hand in hand. And I hope this video, I think I've literally touched everything. So this kind of strategy or style of improving your trading, you can also apply it to other currencies. USD is not the only currency we have. We have GBP, we have Euro, we have Canadian dollar, we have Australian currency, we have Japanese yen, we have the NZD. So you can also apply this method to learn how to use the economics like fundamental influence to check the states of their currencies, and also know how to use it to apply to your technical analysis on charts. This will help you to strengthening the accuracy of your analysis, so that sometimes when you analyze and everything looks so good, and then market still takes you out and keep going, you will not be feeling like, what are you doing wrong? Most of the time, the losses you hit are not just random. They are because something was wrong. Until you find out what was wrong, you might literally be making the same mistake every time. Why everything looks too good to you? So that's how to, get better and improve. Technical analysis goes hand in hand in fundamental analysis. Why? When we talk about money, we talk about the people. The condition of the people determine the condition of the currency. Without the people, there is no money. So the condition of the economy states the situation of a currency, and the situation of a currency determines what the forex market is going to tell you. And when you know the condition of the forex market, you can be able to say, am I buying or am I selling? So that's literally how this thing works. And I hope you enjoyed this video to this end. I urge you to, hit the subscribe button, like, share this if you found value, because many people don't really understand the style of fundamentals. Everything they know is basically to go and be marking structure on trade view. But this is one of the biggest aspects, because once you understand what is happening in an economy, you can know how to attach it to what you are doing on the trade view, know what to expect. So guys, this brings us to the end of this video, and thank you for watching to this moment. Bye, and see you in my next content.